Hello, I'm Jason Strongerhead. Today, I got no time to change my clothes and choose my spec, but I want to quickly do this market update for you, okay? So stay tuned. Today, I'm going to talk about if let's say we're going to have a second wave, going to hit the market, what will likely to happen to the market, all right? Now, if you look at it, just a quick recap, right? Last week, when we talk about the market analysis, I mentioned that the S&P 500 and also NASDAQ, same, all the big indexes, that I drew a line on the RSI and I said that there's a high chance that the price will hold. Because, right, if let's say it's a bull run and the market is still on the upside, usually RSI won't drop below 40 to 50 points. Okay, so indeed, right, let's take a look. So this week, what happened is that, last week, what happened is that, see, it bounced, right? It bounced off, but I still don't know whether it will hold or it will not hold. And if you look at the NASDAQ, it did the same thing. Just that for NASDAQ, it is a lot more bullish compared to the S&P 500 lah. You can see, right, NASDAQ went back to close to its previous high, and S&P didn't. It's like only 50% back to the previous high. Correct? Okay. So what will happen to the market? Will the market go up or the market go down? We will never know. But if let's say there's going to be a second wave, what is going to happen? So if you look at it, right, okay, when the coronavirus hit us, right, the market did correct more than that, right? Okay, so we have really recovered more than 80% as of today. And will we experience a second wave? We will never know. But if you look at the history, right, of all the pandemic, okay, so in 1889 to 1892, we experienced a two wave. Yeah, of course, I'm not there. It was so long ago. Okay, in 1918 to 1920, there was this particular um, virus, right, that was very bad, and it experienced not two, three phases, yeah, three wave. And in 1957 to 1958, also experienced a pandemic that has got two wave. And in 1909, 2009 to 2010, we experienced again the two wave. Right now, will we experience the two wave? Don't know yet. Don't know yet. Okay, is there a chance? Yes. I don't want to play that guessing game. Yeah, because a lot of people say there will be, a lot of people say it won't be. Really, you won't know why it will be or why it won't be. The reason why there could be a second wave could be because it wasn't contained properly, or could be because it mutated. All right. So I read a few articles and I realized that there's no way to really predict whether it will happen or it will not happen. Yeah. So I think let's not predict whether it will happen or not happen. We just need to know when it happens, what will happen to the stock market, and how can you prepare yourself. All right. Yeah. Let's take a look at the Spanish flu. Right. The Spanish flu got three waves. No. But if you look at it, okay, similarly, when this is the point when the pandemic was at its worst. A few videos ago, a few videos ago, I did this particular chart and I share with you the analysis, right? That's where I, I make a guess that because of that, coronavirus probably haven't had its worst yet, but the market is going to rebound. So that's where I buy, right? Okay, so same thing over here. Spanish flu, this was at its worst. At its worst, right? Can you see the market rebound so aggressively? Okay, but was there a second wave? Yeah, there is. You bet. So there was a second wave. Oops, sorry. There was a second wave around here. If you look at it, there was a second wave around here. Can you see? Now, this second wave, what happened to the market? There was a dip. Yeah, there was a dip. So, and of course, it did not dip below, right? It didn't trigger a second bottom, lah. Okay. And after that, the market went up higher and higher and higher and higher. Okay, there was another one where we have a second dip, right? So the second wave was roughly around here. When the second wave hit, there was another dip. Okay, however, I don't want you to be alarmed by this dip. It looks like very deep, right? But if you to calculate, right, the 2009 flu overall market dip is only about 10% only. Okay, so if you zoom into the chart, then you will see like wow, the drop very very drastic. Actually, it's not. No. Okay, so when the second wave hit, there was a dip. What I want to illustrate to you is not whether how big is the dip. Okay, what I want to illustrate to you is that when there's a second wave, the market will react and there will be a dip. Correct or not? And whether if let's say we're going to have a dip, what is likely going to happen? Okay, I think this is key. Okay, this is to me this is going to be key. Okay, whether the social distancing will implement again or no social distancing will be implemented. I want you to take a look. Okay, when social distancing implemented, yes, the pandemic will be more or less better controlled, but the economic activities will really go down, right? And if you look at the past few charts, right, to be fair, the market continued to go up, right? And over time it continued to go up and go up and go up, and it wasn't affected that badly, okay. All the worst one was the Spanish flu, right? Okay, that one was the one that I think coronavirus can match in terms of the market impact. Okay, that one was very deadly. It killed a lot of people. This coronavirus, I won't say coronavirus not deadly. It is still deadly, just that it wasn't as deadly, right, compared to that one. But why the market plunged it at the same rate? I think it's because, right, that one has no social distancing. It was just the virus was very deadly and it triggered a plunge. This one, right, the virus wasn't that deadly, but because, right, there was social distancing implemented, okay, the whole world shut down. So the economic uh, activities, right, dropped significantly. Therefore, the market plunged. Okay, so in the same impact, right, one deadly and one not deadly, but because this one, the economic situation was very bad. Okay, so which is the current one. And if let's say there's a second wave, if you look at it, whether we will continue, we will shut down again or we won't shut down again will determine whether the market will drop how much, I feel. Okay, so if you look at all the previous pandemic, right? Okay, the market did deep and then after it recover very fast, right? Because there's no shutdown, there wasn't any circuit breaker, there wasn't any shutdown. So if let's say, right, this time around there's a second wave and there's no shutdown, then I'm fairly confident that there will be a reaction, but it won't be drastic and it will just continue to go back up. Okay, so I will take the chance that if let's say there's a second wave and there's a dip, I'm going to go in, get into the market. All right, so just to sum up, if you look at it, the market has experienced tons of pandemic before. You look at it, tons of pandemic before. All the pandemic, what happened in the end? The market always trend higher. So I need to look at the long term instead of timing the market. Yeah, and do not panic if the market were to do a dip. Okay, so these are all the situation, right, where there's a pandemic. I've shown this chart before as well. Okay, so just to zoom out, we take a look. When the pandemic hits, when the month ends, what happened? There was a reaction. That means it was negative. You can see it was negative, right? Okay, but 6 months later, most of the time, 90% of the time, except for this one, the market become positive. And 12 months later, okay, except for this one, okay, and this AIDS and also this rubella, the rest of it, all the market turned positive, right? 12 months later. So if you buy and hold for the long term, there's a 80 to 90% chance that you will be in the green again. You will experience positive portfolio, okay, overall again. So if let's say there's a second wave, conclusion is there will be a dip. Okay, very high chance. Not necessarily always, because there are chances that there are occasions there's no dip at all, totally no reaction. Okay, but chances are there will be higher than it will be a dip. But is it going to be bad? I think it will depend on whether we're going to have a shutdown or we're not going to have a shutdown. If let's say really the world is not going to shut down again, then I feel this dip is going to be temporary, and then after that the whole economy will go back up again and the market will just rally strongly again and go back to all-time high again. All right, so that will be my take. Thank you very much, and I hope you have found it useful. This is Jason signing off again. Thank you very much, and I'll see you next week. Bye bye.